investors have their attention fixed on today's 530 billion naira T-bills auction. Traders at Axis Bank expect the 364-day bill to close between 21.8 and 22.4%. Now, for the bond side, improved offers are seen on mid to long-term maturities, particularly on the 2031 and 2053 papers. Uzor Anakebe, Treasury Team Member at Axis Bank, joins me now for more market movement. Uzor, thanks a lot for joining us on the show today. Before we get into the expectations around today's primary market auction, walk us through the reactions we've had so far from the published Q1 T-bills and then bond auction calendar. How realistic is this given the sort of auction performance we've seen so far of recent and then market liquidity?
Yeah, thank you for having me. Good afternoon. So, we've seen the DMO release the calendars like you mentioned, and most of the views for the market participants is that we've seen quite lower borrowings in terms of the NTB space, and this would likely impact on the rates. However, we note that in the later part of the year, we might see improvements in these borrowings, considering the fact that towards the end of last year, the federal government borrowed significantly in terms of FCY borrowing. We remember that they had successfully raised Euro bonds in the last quarter of 2024. So that could have impacted where we saw lower borrowing based on the NTB calendar. For the bonds calendar, we note that there is about 600 billion naira being on offer next week and in the mid to short term. So we anticipate that this federal government is looking for shorter term borrowing to finance the budget. Noting that the budget has not been finally approved by the federal government, we might not see significant borrowing in this first quarter of the year. However, going further into the year, we might see there is a significant improvement in these borrowings from the federal government.
And talking about what we should also expect going further now from today's primary market auction, walk us through subscription levels, stop rates. How do you see things panning out going forward for the rest of today?
Yeah, today's auction is very interesting. One, the system liquidity yesterday opened in a positive note of 120 billion. However, based on the CBN FX auction settlement that happened yesterday, we saw the liquidity today at a repo of 160 billion naira. So this would likely impact the NTB. And considering that we've continued to have bullish runs in the NTB space, we anticipate that if the DMO did not oversell, we might see rates come down slightly from the previous closing levels. So we anticipate that rates would most likely come down in the case that the DMO did not oversell on this offer.
And still talking about rates at this moment, let's also see what's going on in the FX space now. The market is still in the euphoria of the Trump effect. But, you know, we've also had conversations as to whether or not we're going to see a stronger or weaker dollar, and how does that potentially have an impact on the sort of rebound we'll see in the naira trading patterns. Yes, we've seen some stability, but what more can we expect in terms of the range against the greenback and then likely demand pressures?
Yeah, so we noted that yesterday and opening today, we've continued to see the offshore participants, the foreign portfolio investors, remain very cautious and not trading significantly, and we could attribute this to the Trump effect. So most of them wanted to know what policy directive the newly inaugurated president of America will be dishing out for the economy and how it will affect the SSAs, the subnational sovereign African countries. However, we've continued to see the CBN coming in actively to show that they have the watches to meet this demand. So we've continued to see the central bank actively participating in the FX market to subdue this demand. We will not forget to note that regardless, in as much as CBN has been coming in actively in the market daily, we've continued to see the demand pressure increase, and we know that towards the end of the last year, we saw significant supply from the FPIs closing the year, but this supply has minimized recently. And one thing is important to know that most of the local investors are trying to also import goods, considering that closing last year, most of them have sold out their stock in the festive period. So they are trying to stock up their supply. So we'll continue to see a lot of demand pressure in this space.
Okay. Uzor would have to leave the conversation here for now. Thanks a lot for the update. That was Uzor Anakebe, Treasury Team Member at Access Bank.